Happy 2022, everyone. I'm so pleased to share this recording with you. I wish all of you a healthy, most successful, prosperous, uh, and joyous, filled with love 2022. I hope you will have a wonderful trading experience in the upcoming year, as well as investing. And I'm very grateful to have you in the past and your present. So with that in mind, I thought, although it is the New Year's Day, and I know most of you probably spending with your family and during your resolution, I felt it would be a missed opportunity if we didn't have a recording. So I decided to do one, albeit it's not live. But I wanted to look at the year that we had, mostly in numbers, rather than doing complete market analysis as we do every week. So this will be more of a looking at what kind of a year 2021 was, and then taking it from there. In the next few sessions, we will look forward to what kind of a 2022 we should expect. So as always, we'll briefly go over the economics, and then I think a little bit about the charts and where we stand now. And then mostly I will, as I mentioned, will be more of a reference. So this recording will be more of a reference point for you, where we starting and what kind of a year we ended. With that in mind, as you can see, the economy has been just, especially the job market, has been great improvement. As you can see, the jobless claims, the continuing jobless claims kept surprising. This was the best I think we've had in very, very long time. So, and we are ahead of the 2019. And this was really interesting, surprising. The box office receipts, because of the Christmas and holidays, we actually are very close where we were in the 2019 level. So a lot of other things are really getting close to where we were in 2019, except, again, the restaurant industry, as you know, with all this, the new Omicron and all the concerns in quite a few states and globally, obviously this is for the United States, it is still lagging, and there's still concerns for that. And also the airline industry has been affected. So I thought I just want to share with you with some of the charts and what has happened in 2019, 2020, 2021, where we stand. There's a lot of improvements, but again, you can see the airline or the commercial flight, that's where we are lagging. Although, again, because of seasonality also, and the staffing index and anything job or economy related, they're doing well, but it is the relationship to the airline and leisure and restaurants, that's where we are lagging. As far as upcoming week, I think it's very important, although it's the first week, and perhaps the first day, people still will be on some kind of a holiday, and they're coming back slowly, but we still have big meetings. For instance, Tuesday, we do have the OPEC meeting. So obviously the crude oil plays a big role. So that's something to just watch for. And then Wednesday, we have the FOMC meeting minutes, which is always lively, and it's interesting to see what their thoughts had been in the last meeting. But the main one, which is very important, and we have strategy for that, is the Friday, January 7th, which is the first Friday of the month. And generally, that's when the non-farm payroll comes into picture. That's what you want to pay attention. All right, so that is an important trading day. And again, the markets are always interested in seeing what happens seasonality wise, what direction we're going. So let's pay attention to that. As far as the markets, generally, as far as the sentiment goes, it is amazing. This is American Association of Individual Investors. And as you know, they take it every Wednesday on December 29th. The amazing thing is how average it is, the hold, the bearish is absolutely historical averages, and the bullishness is historical averages. So it's very, very interesting. So that's as far as that. Doesn't give us a lot of information, but also it tells us how people are feeling. The same thing with the fear and greed index. We are close to greed, but I don't call it, it's average. Again, we've had the Christmas season. This is as of December 31st. The good mood, and also we had our Christmas or Santa Claus rally. So that shows in that. So let's see what happened last week. We just go through these charts pretty quickly because I want to spend more time on again, the numbers of the 2021. So if you recall, we've been hitting this resistance at the 161.8 Fibonacci number for the longest time, since beginning of almost November. And we finally this is called the Santa Claus rally, which happens generally from the Christmas day to first week of January, continues. So we've had that one big day and we broke through this, and now we are above that. So now this area becomes our support. So we want to watch for that. Of course, look at this volume. I mean, it's non-existent. So a lot of people are on the holidays. This was more of a really retail investors doing things. And at this time, if you recall from our last meeting, when you see all these volumes, this is where the institutions were doing their tax selling, there's allocations, whatever they needed to do. This was the area. This is more of a, again, feel good time for, again, mostly non-institutions. So a lot of bonus management happening around here. And so this is, we go through the Bollinger Bands and we see again at a nice rise. We go ahead of, we hit the upper Bollinger Band and we are embedded. So that's all good news. And basically that has been positive. So we are staying in that mode till first week of January. Generally, the first day of January is, remember, the 401k money, retirement money, profit sharing, KEO plans, whatever it is, that new money comes in and the managers have to put them to use. So generally the first day, second day, especially New Year, you have a upper bias. So we shall see. I mean, we've had an amazing run, which we will review what kind of a year it was. And you can see it has continued. NASDAQ, the same thing, although it's almost like a double top. So we have to watch for this. And so we had a nice, really big rally. And after that, this really has slowed down. We are right on the edge of overbought. So Monday, we shall see what happens. As far as the Russell has been the weakest one, and we will discuss in our trade of the week, we can see we are been hitting our head against that 100-day moving average. And although we are getting to embedded area, but it has been really consolidating right around that 100-day moving average. As far as the YM, which has been very strong, we hit the all-time high. We've had, like, I think it was amazing how many all-time highs we've been hitting between the S&P and the Dow. And we are embedded nicely. And we went against the Bollinger Bands and we retraced. The same thing with transportation. We had a sell-off and then we just, again, we had that Santa Claus rally and sitting on embedded. Opposite is the VIX. We had this big moves. And then since then, obviously, again, with the rally at the end of the year has broken down, but we still above. While we have, again, these all-time highs in our indexes, we are above the lows of the year, and you can see the support. So the VIX is still telling us, listen, we are not, completely convinced that this is, safe journey as far as just continue going through the highs. Remember, the new year starts. A lot of new ideas come into picture. There's going to be a lot of reallocations in a thought process, what we're going to do, which we'll discuss in our lesson. So basically, VIX is still above where it was last month. So basically, it is embedded though on a oversold position, and the VVIX is back again. That 110 is crucial for me. We broke below the 100-day moving average. So we want to watch the volatility of VIX. It became embedded. And then when we look at the 10-year note, and this is very important, and that's what I think next year will be, we talked about it, it's the Fed, it's interest rates and inflation and the earnings. So we want to watch that to see how they go hand in hand. So you can see there actually was increase in rates. So we broke above the 100-day moving average. And opposite will be in the 10-year notes from the actual price itself. We broke below 100-day moving average, and we are right sitting on the lower Bollinger Band, and we are oversold though at this time. The 30-year bonds, on the other hand, they are just went a couple of days below the 100-day moving average, and we are just trying to bounce back, and they are still embedded though, so we want to watch that. And consequently, with the higher rates, financials do better. I had mentioned a couple of weeks ago, generally seasonality wise, middle of December, it becomes the low for the financials. They usually have a rally toward end of the year in January. So this is what happened. And there we are, again, because of the yields, and we are above the 118-day moving average. On the other hand, we look at the dollar. Dollar has been strong, and that has played a big role as far as attraction of because of its attractive interest rates, but we are really in a squeeze right now. We are oversold. We are really been going just as gradually back and forth between the upper and lower Bollinger Band, although we're sitting below the 18-day moving average. It is an oversold. So this is going to be a big key for next year. So we want to watch that. And then the gold opposite of dollar. Again, I mentioned December 15th, generally middle of the December, seasonality wise, is a good time to go long gold, and usually till January or so. But we've had a nice move since exactly December 15. We hit that lower edge of the Bollinger Band, and we had a nice run. So it looks good because we are above 18 and 100-day moving average, and we are embedded. So that looks good. Silver is, again, this Omicron and a little more economic sensitive, obviously. They also had their turnaround mid-December, but we are sitting right under the 100-day moving average, although above our major support and also 18-day moving average. So those are as far as silver and gold. And again, you can see commodity-wise what has happened to copper at around right mid-December. So that had a nice run. And then Bitcoin, we've talked a lot about that. So I think it's going to be another theme. December, we might have witnessed the tax selling on Bitcoin. There's been a lot of frustration, but there's a lot of people who were holding it and maybe they just gave up. My thought was, I think we were talking somewhere around here, my thought was we might have gone to right around the support zone around, which we are very close to, like 42,000 area, and we're at like around 46. So but we are hitting the lower Bollinger Band. So this will be an interesting story. The big story was right around this double top that everybody, the whole idea was that, yes, Bitcoin is going to go to 100,000 by end of the year. And that's where a lot of interest came. And it's almost down over 40% from the high, or 35%. So, and as far as Ethereum, which was stronger than Bitcoin, we just broke below the 100-day, which had been a big support. So these are going to be interesting if you want to play the digital currencies. Now, crude oil, again, they had a nice run. We got a higher low, and now we have a higher high. Again, the OPEC, watch for the OPEC. we are embedded. So we hit the upper Bollinger Band. So the next natural support will be the 100-day and 18-day moving average, if there's going to be any support. So, and consequently, energy stocks are pretty much similar to that. All right, so let's briefly just talk about expected move for the last week. And again, why we respect that is because of this. As you can see, we had a big Monday, and where did we go? We went right to the upper edge of the expected move in the S&P. What happened in QQQ? We actually had a really great day. And finally, on Thursday and then Friday, we just came back inside of the expected move. IWM had a very volatile move. We've had a nice, almost like a double bottom, and the support we had talked about. And here we just stayed right in, like, no move, right in the middle of the expected move. And the YM hit the upper edge of the expected move, and it came back on Friday. And on the other hand, the opposite side is that the bonds, they actually went to the other way, and they bounced off the lower edge of the expected move. Gold went to the upper edge of expected move on Friday, and silver the same thing. And finally, the financials that we spoke about, they had a decent week, and they just stayed on the close to the upper edge. The same thing with energy. So this is just basically some ideas as far as what we had last week. So this is where I want to spend bulk of our time, and that's again have a journey the last year. So I want to look at a few things, but as an analyst or as a portfolio manager, or when you want to analyze your investments, again, we've talked about there's two ways you can choose your holdings. But mainly, let's say we talk about stocks, you can either look at the big picture, which is from the macro point of view, and we call that top down, because you look at the big picture and step by step you come down, or it's bottoms up, which that means you don't really care about the economy, what is happening with the environment of the investments. You have found a gem which stands alone. And I've used the example of, let's say, a company who's finding the solution for some kind of, let's say we talk about COVID, or we talk about cancers, like a lot of biotechnologies really stand alone. So they found this great solution. At that time, if people are, let's say, not healthy, they don't care what is happening with the economy. That is a big breakthrough. So today, what I'm going to do, we're going to look at the big picture. We look at the big macro environment as far as where, let's say, the world stock markets have done, what our indexes have done, and then we go step by step down. So let me start with this. This is, I know it's a little small, but you have access to the slides, so please review this. And what I wanted to do, I want to look at the S&P, NASDAQ, and the Dow Jones Industrial Averages yearly returns, and we go back to 1975. And what we want to look at is from 1975 to 2021, we look at the returns, and I usually do this with almost all the global stock index. I look at the patterns, and one of the patterns you can see is developed with all of these are that we rarely have 2 years of selling in a row. So the only time that we've had that was in the, obviously, internet bubble, and when the 9/11 and the recession happened, we had the 3 big downs, but we were coming up from, you look at NASDAQ, look at these numbers in the 1990s, 39 point, almost 40, 22, 22, 39 or 40, 85. So we've had a fantastic 1990s. Also 1980s were very good. Also, there are some numbers. So there was a lot of inflated, we call them, the bubble. And that's how the bubbles were created. And that's the reason we had this big loss, or the big down 3 years in a row. Other than that, if you notice, since 2002, we've had only one, which was really bad year. That was a financial crisis, and that's when we had the average of 38 to 40%. It was like really global disaster. So, but other than that, we really don't have any two down years in a row. We've had three great years in a row, and except the Dow has been lagging, as you can see. And this is a time to kind of sit down and analyze to see where you want to be. So this is from the history. Again, I look at this and I say, all right, this year, if you're going to have a down year, what is the odds of having another down year into 2023, for instance? So that's just a food for thought. On the other hand, when you look at other major indexes, and I've chosen just maybe 4 or 5. This is the UK FTSE 100, and again, you can see, except we've had that 2000 stands out. One of the interesting things I want to mention, we talk about international investing, so that's where you want to be a little selective, and also you look at, okay, in the cycles, where are we standing? This is where FTSE was in 2000, 6,930. All right, that was the beginning of price of, and then this was the ending. So let's say ending of 2000, you were at 6222. And, or the beginning of 2000, sorry, we were at 16,930. And this is where you are at the end of 2021, 21 years later at 73.84. Basically, you're up 300 or 400 points, which is not even 1%. So that buy and hold for British pensioners, let's say, it might not have, unless they had, obviously asset, as far as the dollar cost averaging, that could have worked. But you can see there was not a lot of big movement in FTSE. DAX did a little better. When we look at DAX, we started the 2001 at 64.33. We were up over about 110% or so since that, 120. So even that, we are averaging maybe 4% a year. So these are not very glorious returns. So, and that's what you want to be careful with. Again, where do you want to invest, and are there any opportunities? On the other hand, the Shanghai Composite had, very average return last year, and this is the beginning of the China's really getting recognized, being a world power. So you can see it returns in some of the developing countries. At that time, China was, and now obviously it's a big power, but still part of emerging markets. You see the wide range of returns. You go up 130, 97, then you drop 65. You go up 80, you drop 14. And notices how few drops that we've had, but when we drop, there's a big drop. So 2018 was the last down year, but the China has been a big story. So we had only 4.8 compared to other major indexes that they were up. So again, it's not more of an analysis of individual years, it's more of a pattern recognition. And CAC 40, which is the French major index, the same thing. You look at where we were at the end of the 2000, we were at 59.26, or beginning of 2001, and we closed at 71.53. Now, one of the big winners, we've been big in India, since 1990s, and here is the Indian market. This is beginning of 2001. We were at 39.72. And where did we finish this year? At 58,253. So it talks about China, but look at Indians' markets returns. And again, they're the biggest as far as the moving the middle class. That's really a middle class story. So that's from the pattern recognition. I just thought we will discuss this more perhaps in the future, looking at a lot of other indexes to see where are some of the opportunities from the big picture, from maybe, again, emerging countries, but we are not specifically talking about individual stocks. We're looking at the whole country indexes. So let's go visually look at on the map what happened last year. So this is for the 2021. These are our biggest stocks in different, again, sectors. And what you can see, these are the returns for your big companies. Obviously, this I thought visually you can see, wait a minute, entertainment, telecommunication services, and the communication, they were losers. So we want to look at, are there any opportunities? We want to look at whether there's the growth has been fantastic. Momentum stocks have done well. Is this time, would 2022 be a value style winner? So do we want to look at some of the stocks that they didn't, they have a great valuation, but they did not have great returns? So we'll discuss it a little more, but I just visually, again, I don't want to, you have access to this so you can go over it, but this is just visually, you can see where the action was. The same thing when we look at the exchange traded funds, we want to see where are the red. You see the China ETFs, the Brazil. We look at the gold miners and the miners, and basically inverse the negative about the markets from the TZA, which is the inverse, triple inverse of Russell 2000 to VIX. And then again, these are all inverse ETFs. So is that maybe time, should we evaluate and see some of the big losers, could they be a winner this year? I'm not big on inverse, so these are more of a very short-term trading tools. But you can look at the miners, for instance. Is the China going to be in story? Is Brazil going to be a story this year? We get gold or silver, for instance, and so on. So we'll look at even more in depth. And what I also want to look at is the world as a whole. Where are the best regions? You can see, again, China had a lot of difficulties. We've heard about what is happening from obviously the government control and basically the trade side of things with USA. And then, but some of the, again, the winners, and then we look at like South America, Latin America, what is going on there. So these give you a better picture of where the opportunities might lie for the next year and the years to come. Now, I believe I've always been a value investor, and I'm not a big fan of the PE, which is the price earning ratio, just because of what I see is could be manipulation. But if I'm going to use a PE standard, I like to use the PE to growth ratio. What I want to see is I want to see the companies that the price earning is actually less than or equal to their growth. So the growth is there while their price earning is not as big. So there's much more growth based on the PE that you're paying. So I use that more of even from the valuation point of view. I want to see some stocks that perhaps they have been beaten up and they might be a good candidate for this year. Now you can see when it's red, that means their price earning is double their earning growth. So and some of them, like Google, still has momentum. It's it's almost 1-to-1 of Facebook. And then when you see like really light red, a lot of financials, it's a different valuation for financials. So I have to be very careful when we are analyzing the different companies. So be careful, like you cannot equate technology with utility and, for instance, financial. So just be careful. This is, again, visually, I want to see where do we stand as far as the price earnings to growth ratio. But another valuation that I use, which is I prefer, again, more than PE, which is very much accounting related, is price to sales. So the right economy is growing, but I want to see where we, based on the revenues, based on sales, where these companies stand. So price to sale is more relevant for me than basically price to earnings. So you can see there's interesting opportunities in the telecom services, for instance. They haven't done anything. Like AT&T just did the big move happened in last week or so because of they pay such a good dividends, which we will in the next couple of weeks or so. We talk about the dogs of the Dow, the highest paying dividend paying stocks that they might be attractive because the interest rates, as we know, it's still they're going to be still low because of although the markets have told us that they probably have the 3 increases, but they probably would be 0.25 each. So we even go to like 1%. So there's still opportunities to some good paying dividends. We'll talk next, but the price sale is interesting. So you want to look at again some of the stocks that when you're doing screening, look at some of the low price to sale stocks. And last but not least is the dividend yield. As I mentioned, what are some of the good holdings out there? So if the yield of the short-term yield is going to go to 1 by end of 2023, it might go to 1.75. Well, you can see the AT&T was paying, the Verizon is paying 4.8, Johnson & Johnson, Pfizer. So just some ideas. Exxon and Chevron, they're paying close to 5. So watch for that. So that's from the valuation point of view and some ideas. So now let's look at, we looked at the indexes. So let's look at what were some big winners in any market last year, and we look at the futures market. Now, one of the things I've said in the past, we've had classes on commodities and currencies, and the idea has been that a lot of people find stocks sexy. They always, obviously your 401ks, majority of investments are in stocks, but you want to be familiar with multi asset classes and learn about them. This is the winners of last year. So oats was up almost 90%, coffee 76%, canola oil, lumber was another big year, especially in the beginning of the year. And then gasoline, we talk about majority of these. We've had classes. Now gasoline was big winner in 2020 as well as 2021. Crude oil, ethanol, crude oil, Brent, natural gas, we've talked in the past. And you come all the way down till you get to S&P and NASDAQ, and then copper, corn, sugar. So we want to look at that, and then we go look at some of the losers like palladium, and silver was down, platinum was down. Now, would we find, and you can see very much like Aussie dollar, which is more of a commodity related, and New Zealand dollar is more like a younger sister of the Aussie dollar, gold, Swiss franc, cocoa. But majority of these could be economic sensitive. So we want to watch to see if there's any opportunity, but also the dollar plays a role. So would we have a bounce in platinum, for instance, with now expansion of, again, with the supply chain, with the cars, would that be resolved? And would that have be a kicker for palladium, platinum, and silver, for instance? So we talked about that. Let's talk about what were the best winners as far as the Forex. Now, it's interesting that the Bitcoin is considered like an alternative currency. So obviously that was a big winner for last year. But the dollar was the king, and a lot of related winners are based on dollar. So like US dollar yen parity, it was up 11.47%. On the other hand, you can see euro going against dollar was down 6.81%. That was the worst performing. So one thing that was interesting, now these, what I have here is we call them ADRs, or American Depository Receipts, which is the BNY, by Bank of New York Mellon. These are the current stocks that are listed in United States, mostly New York Stock Exchange. So these are foreign or international companies who have listing in the United States. So when we talk about countries, some countries might have only two, and some countries like China could have over 230, for instance. So what I thought it was interesting to see of all the ADRs, what was the best performing as far as a country related, and Greece won by far. I mean, it looks like a completely very distant history when Greece was actually going bankrupt. And here they're listed Greek companies were up 120.1%, I mean 121% almost. And the main reason was, you shall see, is a common theme, it's the shipping and marines, right? So, and Greek, some of the largest liners are Greek. So, and then Norway, the same thing, Denmark, Monaco, similar stories. Ireland, talk about medical, and Netherlands and Mexico and India. So this, I thought, is interesting. And then the lowest ones, like you can see, China and Malaysia, for instance. So by looking at that, you can look at opportunities. Would Greece, again, continue to be a winner, some of those great companies, or do we find some values in some of these beaten up in this, countries with their ADRs, such as South Korea or Peru, which is a lot of mining, and Chile, and then of course China, so, and Hong Kong and Brazil. So these are just want to share with you. This doesn't represent the actual country's return. We will discuss it in the future. It just tells you what those listed foreign stocks in the United States did. So let's now with the next level. So we saw the country, the index is there. So let's see, as far as capitalization, where do we stand? Now we talk about mega caps, how the big horsemen, the 5 or 6, like from Amazon and Apple to Google and Facebook and Tesla and Microsoft, and now even Nvidia is trying to join the club. We want to see what was the best performing as far as a market cap goes. So where was the emphasis and where was the best return? Now, it's interesting that the Nano are the companies that their market cap is less than $50 million. So they're very, very small. So it's a 50 million. And what we want to look at is they had a very good, return. They beat the averages. The interesting thing is the mega cap, the big ones, which is now they're becoming like $1 trillion clubs. When we talk about that, like Apple and Microsoft and Amazon, and basically they had a very good return, and they were really major responsible for the, like, let's say, S&P and NASDAQ returns. The third winner was the large caps, and when we look at large caps, we basically looking at the 10 billion and over, and those are called large caps. So they were up 16.92. Small caps, on the other hand, that's the Russell 2000 or the S&P 600. They were up 14%, which is almost half of what the mega caps did. And when we think about the small caps, it's companies that they're $300 million in market cap to like about 2 billion. So that would be your small cap. Micro is that, by the way, all of these have their own ETFs, except there's one Nano, and it's small, but like Micro has its own ETF, and it was up 11.96%. And micros are obviously between the Nano and the small cap. So we're looking at, and Micro would be 50 million up and 300 million the maximum. So it's 15 to 300 is your micro companies. And last but not least, the biggest loser, not the loser, but the least as far as return, was the mid caps, and they're the $2 billion to $10 billion. They are very good hybrid. They're middle of the road. So when things starts moving well, the mid cap will be a very attractive area to be. They were up 9.5. So now you know the market caps. So the next level, we want to look at the sectors. What were the best winners as far as the sectors go? So energy, which initially got killed in 2020, they were they had a great start, especially after the vaccination starting. So they were the big winners. They were up 37% almost, and then real estate, technology, financials, and so on. So the two lowest returns came from the consumer cyclical and consumer defense. So now we know that's the sector. So there's a big picture. We have 11 of them. So what about the industries, which is a subsector of the sectors? So just wanted to review that, the best performing industries in the market. And believe it or not, it was coke and coal. Remember, coal, everybody hated. Now, China cannot have enough of coal in the sense they really need it for energy. So you see a lot of energy related coke and coal, and then oil and gas exploration, and then the marine shipping, so 85%, aluminum, uranium, trucking, and that was your biggest winner. So what were the biggest losers? Can you use this as a contrarian and find some opportunities? So performance year to date, the worst one was for 75% was the education and training services, which is very much a lot with the Chinese related companies. And then how about precious metals and minings? Can we find attractiveness there? And mortgage finance. So these were the three biggest ones. And then, silver and solar, internet retail. So gambling, a lot with the leisure, for instance, the utilities, and the shell companies, which the SPACs were really hot in 2020. Look what happened to them. So they were down. So the reason is we want to, again, look for these sectors and then look at the industries which have been beaten up. And we want to find maybe within those industries, some of the, maybe from valuation point of view, can be find really solid companies. Perhaps they have very attractive price to sales and no debt, so very low debt. The price to cash flow and free cash flow is very attractive. They have a solid, as far as a business model. They've had some maybe hiccups, but the management and all that, they're really working on it. Or maybe they had a big change in management. So these are a lot of fundamental reasons you have to investigate on your own. And we will have a class, and the title will be timely because I believe it's going to be a 2022 will be more of a stock market pickers or stock pickers market, I mean. So you have to do a little work from the fundamental analysis. As far as now, what I want to go, let's look at individually each sectors, what were the best winners and the losers in each individual sectors. And for financials, the financial conglomerates were up 41.65%. On the other hand, the mortgage finance and shell companies were down for the year. In technology, semiconductor equipments and semiconductors were the big winners. And then the solar and software applications, they were actually the losers. When we go to industry in energy, the oil and gas exploration and then uranium were big winners, and the equipment and services were still winners, but were the lower winners, or they still did very well. As far as the communication services, internet and content and information and publishing, they were winners. And then telecom services, we talked about AT&T and talked about Verizon and T-Mobile, which was really done well, but those, and then the gaming. So let's see if there's any valuation there. As far as the basic materials, we talked about coal, but aluminum, lumber, agriculture, steel. Look how many big winners you had in that area with, again, commodity related. Is that a time maybe it will continue? Because remember, commodities, when the cycle starts, doesn't just go one time. It usually continues. So we want to watch for that. And of course, the supply chain also had played a role in that. And then you can see where gold and silver were down. Now, it was interesting, while the silver and gold were down, there were a lot of trading opportunities. So you could see even last year, January pop in silver, and August, and then down, and it's been a yo-yo. So they have become a good trading vehicle, but um, is this the time that they will catch up, especially with silver? I think again, if the economy comes back, especially globally, that would be a attractive one. How about consumer cyclicals? You can see the home improvement, retail, big winner again, and the internet retail and gambling and leisure. It's a common theme. They were the um, uh, the losers. As far as the healthcare, healthcare plans, and so on, and healthcare information services were the lowest return, and the consumer defense, or the consumer defensive, grocery stores, farm products, beverages, and then we talked about the education. So these are the beverages, the wireless, the wineries. It's interesting, but the breweries were down, wineries were up. Interesting observation. Industrial, we can see the marine and trucking, marine shipping, anything to do with transportation, and then specialty business services. And you can see airline, and they were down for the year. The last but not least is the utilities, for instance. There were some good winners, independent power put, and the water. Water is always interesting subject, so you might want to do a little more research on that. And the renewables were the big losers. It was interesting on that because the oil came back and basically it affected those. And then the real estate, the industrial and the residential and retail REITs, really, they're all big winners. But anything to do with the services and development and the mortgages with the lowest rate of return. All right, so now we went from the countries, and then we went to, again, the size of the companies, but we looked at the sectors, the industries, and now we want to look at some of the individual stocks to see, first of all, what were the best performers, and what are how about the largest? We talked about mega caps. What did the largest companies in S&P 500, which everybody around the world follows, looks at it, and we had a map of them, but I thought it's good to see how Apple, Microsoft, Google, Amazon, Tesla, how did they do? You can see a couple of financial related. It was Visa was barely down, and I think MasterCard and Walmart, but MasterCard was like 0.67%. But Disney was out of the top 20, was one that got affected the most because of quite a few things going on with internally, I believe. So they were down 14% for the year. As far as the S&P 500, the best winners out of the 500 companies, again, there was healthcare and also energy sector. So you can see Dewan Energy is like up 196%, Marathon Oil 146%. So NVIDIA was 125%. So just a food for thought. You can do this on your own if you like. I just want to show you. So what do? You just go to performance and then just look at the performance here today. So these are the best performing S&P. The worst performing S&P, would there be any value in them? Again, the gaming company, from the Penn to GPN, Las Vegas, Sands, Activision, you see quite few when they were down big time. So Viacom and Woo and PayPal. So Twitter, are there any value in them? Now, as far as the total, that was S&P 500. I want to look at, out of the 8,433 listed in Finviz, what was the best winner? It was the Digital World, which is that this is a shell company, SPAC, for the Donald Trump arm of coming up with its own marketing social media, and that was up like crazy 10,000% or whatever it was. So it finished the year. This is the warrants. So the W stands for warrants. They were up almost 3,000%. The stock itself was up 416%. But this is Avis, the car companies, and Sava, and GameStop, and of course AMC, big meme stocks that you had heard about. So those were the best performing of all of them. I didn't go to the worst performing because there's a lot of small stocks. So basically what I did here, I was looking at the large volumes, and so there's few of them with the prices, small, low prices, but I was looking at for the more of a liquid companies. As far as the ETFs, which is a symbol of, again, the sectors and everything else in between, I want to look at the largest ETFs with the largest volumes, and you can see, inverse of the QQQ, for instance, was down, but S&P, financials, QQQ, emerging markets. So these are the largest ones. So Brazil. So again, you can do a little more investigation on your own. So I just want to show you where they stand. On the other hand, what was the best performing ETFs? These are the top ones, and they're very much either transportation related, like this is like a black dry. That's what B dry is. I mean bulk dry. Bulk dry is the shipping, and they were up 283%. That's the ETF. And the nail, and then we have the gasoline and oil, which is Gosh, and all of those, they were up very much. Carbon, very much energy related, and clean air. So I hope that was helpful, because this, I'm hoping the beginning of the year with your new resolution, you can, New Year resolution, you can find some opportunities in those. Interesting, I just thought to share with you what every month of the year did in 2021. And basically each individual month, what was our worst month was, basically we had 3 down months: September, November, and January last year. And then obviously the best month was October, after coming back from a really bad September. And then April also was. Then you can compare with seasonality we've spoken about. We've talked about, the October to April being the best seasonality. End of October, what I mean, it's actually November, December, January, February, March, April. Usually seasonality wise, they're the stronger. So basically that gives you an idea. But also I want to look at generally since 1985, how NASDAQ 100 has behaved. And you see for NASDAQ, January is the strongest month, followed by November, April, and December. So, and then also just talk about the best ETF. So visually, you can see we've had the bulk dry, and we had the command like a carbon related, and then we had the tin related, another carbon to carbon ETFs, natural gas, and then this is very SPY. So just food for thought. Next one is I just want to go back to 1985 to see inflation adjusted. Where do we spend visually? And this is the booming 1990s. See how wonderful growth. And then 2009 on, it has even done better. Of course, the slope is a little, this was really sharp. This is a little more manageable for the NASDAQ, but we are close to that upper edge. So something, just a food for thought. How far can we go before we kind of do a little correction here? The last but not least, I want to share with you, again, the 4-year cycle, election cycle, and this is where we are right now, the second year of the presidency, and the markets are not very kind at that time, usually are flat, and most of the time it's the pre-election, the 3rd year, which does very well because obviously they want the sitting president wants, and it's party, they want to win, so they do everything they can to help the economy. The 2nd year is when they decide to, if we're going to do anything and make people mad, this is the time, because people have the constituents, they have a short memory. So basically this is the time, and there's a midterm election coming. So a lot happens. So just watch for that. This is where we are right now. So for 2022. I hope that was helpful. That's why I want to spend a lot of time just reviewing that. Just got a few more minutes. I just want to share the trades that I had done, I had shared with you. Just want to, because I closed them, just want to share that with you. Now, this is our Russell 2000. I did a IWM options. If you recall, that was on December 20th. It was a Monday. And we had this big support. Every time we had hit this big support, we had a nice bounce. So it was a big Monday down, and I used this support plus turnaround Tuesday as my option strategy. And I got out here. We were hitting against the 100. I've been gradually getting out, as you can see. The successful investments or trading is all about managing your position, managing your risk, but position. So, we cannot be all or none in the sense that we just wait to make 100 or 200%. So I usually like to close my positions gradually. And this is the last one. Again, we could not, you can see, we tried, we got rejected. And I said, that's okay, I'm done. And I got out of my option strategy. This is where I got in. I played the January 21. I needed time, so I didn't want to have a theta decay. I wasn't sure we will have this bounce immediate. I knew the Tuesday will bounce, but I didn't think how fast we get to this 100-day moving average. So the best liquid one was the January, and this is the last one that I got out, 28 and 29. And that was 212. This 213 was my last one, and the December 29th I got out. I just want to share, like, these were the each contracts what I was out at. So there was 4 of them around 25. I had 2 at 50, about 75. And then this last one was just a market order. I just want to get out of it at 55%. We almost had one close to 100%, but anyway, so that's that. And then, as always, I do my gold trade, and that was this past Thursday. This is where I got in. It's funny because I wait for a Friday, but the Thursday morning I had the buy signal, and all of them almost hit. This I had I had 10 contracts, and that was 100%er. Of course, it went down, but then it could have been 100. I mean, this was a 200%er if I would have held till the end of the day. But the system is the system, and the discipline, and this is how it worked, and it was a good day. One of the things I usually like to just get out the first of on Friday mornings if I can. Usually there's always a gap up if it's going to work. So it was unusual that it went down, and usually doesn't go all the way up on Friday afternoon like this, but it was a good trade. So basically, one of the I've been watching, we talked about the gold trade. You see that December 15th, we had the reversal from the 38.2% Fib. And since then, we've just been going up. We were inside the our cloud, the Ichimoku cloud, and this was my support. Once on 16 minutes, we broke above that, and that was beautiful. And then now on Friday, we've broken above the cloud. So let's see if we can have a confirmation, have another day above the cloud, like let's say like this. So let's watch for that. But I'm done. I'm out of it. Just a simple scan. I did it on Russell 3000. It's a larger cap. We have lots of stocks, big stocks in squeeze. The biggest one, Amazon. Amazon is in a squeeze on a daily. I believe I saw it in a weekly, hourly, 30 minutes. So watch for that. Exxon, Chevron, Morgan Stanley, BlackRock. I mean, look how many big ones are in a squeeze. This is something that, it's first week of the year. There's nothing major on earning calendar. So this is all I can offer you. There's nothing big. Walgreens, maybe. Boots Alliance. That's Walgreens and Conagra. in 2 weeks, so that's when the earnings start. So that's, we want to watch for the catalysts for the market. So with that in mind, I very much appreciate you, and I wish you again a fantastic year ahead. I hope this was helpful. I look forward to seeing you on our Wednesday's class and wish you a fantastic week ahead. Thank you very much.